if you use volume analysis in your trading, today I'm going to show you a trap that you can be easily get caught if you don't understand the logic behind everything happening behind the scene. Okay, here we see the previous day, which is in our case Friday. This is our volume profile. This is, by the way, 30-minute time frame, and this one is 1-minute time frame. In this video, I'll walk you through the exact logic behind everything I do each single day, which helps me stay profitable every single month. Alright, this is last Friday, what we see here. This is a cluster profile, what we see here. This is the volume profile, this is a cluster profile, and these overnight volumes, pretty huge, right? You can see these volumes here, they are above, the point of control is above, and all these volumes are positioned as selling volumes, right? And you may expect what you usually do, I usually hear on YouTube. People expect the price to go somewhere, which is catastrophic actually for your trading career, for your account, for your money. You can't expect anything from the market. This is what I'm preaching through almost each of my videos. Okay, you would expect, I would speak your language, okay? You would expect the price to go lower. Pretty logical, right? We see volumes here. Once again, the point of control is above. All the volumes, these huge volumes, are positioned as selling volumes. And even these volumes throughout the Friday, they were not noticed. The price just moved through them. What is the next potential move? You would expect the price to go somewhere here, to this candle. You would call it an imbalance, which is actually not true. We can't call just a part of something an imbalance. And I'll talk about this in a separate video. You would expect the price to move somewhere here in the middle of this candle and then go down, right? This could be your logic. But no, this is absolutely wrong. Here, this is a 1-minute time frame. You would say something like, before the beginning of the New York session, you would see this double top and you would say, I need to sell. I need to sell somewhere here, or maybe I need to wait before the price moves somewhere here, and all these expectations are absolutely wrong. And now I'm going to fix it, because now please listen to me very, very carefully, very attentively, because what I'm going to talk about right now is a unique knowledge. No one else talks about anything like this on YouTube. Just listen to me very, very carefully, and this way the next time you see this volume trap, you won't get caught into it. You won't be fooled. And this is the magic. This is the magic of trading. Understanding the big picture, understanding who to follow, understanding where the institutional traders are and following them, and knowing when exactly to take a trade. Now, let's start from the very beginning. I always analyze 4 main time frames. The weekly time frame, the daily time frame, hourly time frame, and 15-minute time frame. Throughout the week, I use the 15-minute auction. Yes, I follow the auction principles. Throughout the week, I analyze the 15-minute auction, the previous day, the volatility map, the closure, volume distribution, and then take a decision when to take a trade the next day, or just skip a trading day, which is absolutely normal. You don't need to trade like every day. No, all you need to do is to be patient and to know when and where exactly to take a trade. Let's assume your expectation for this day was to sell. You would wait for the price to come back to this area, somewhere here, and you would sell somewhere here, right? Wrong. Let me explain. I follow the auction principles in my system, and I always analyze 4 main time frames. I already said it. Now, let's analyze the weekly time frame. What do we see here? Previously, we had an impulse. And what happened here? And potentially right now, we see a balance forming. Why potentially? Because, yes, we have a previous impulse, which is one of the crucial steps to identify any range or any consolidation as a balance. But we don't see the second segment. The second segment is a responsive activity. one or two responsive activities from one or both sides of the balance. So this first segment potentially helps us to identify the boundaries, the top boundary and the bottom boundary of a potential balance. And if we see a responsive activity formed here, a seller's responsive activity or a buyer's responsive activity, then we can classify all these things as a balance. But right now, this is just a directional volatility with a potential balance forming. What is the task here? The task here is to reposition this resistance level. What is repositioning? Repositioning is an impulse above the resistance, a clear impulse, a movement like this one. This is the task of this auction. I always have two potential scenarios for every auction. Now, the positive scenario looks like this. The auction can accumulate some volume here and then reposition this level. And in this case, we wouldn't classify this huge pullback as a part of a balance because the balance would not form. But we also keep in mind the negative scenario. And the negative scenario here would be building a seller's responsive activity. And in this case, the price would, we can see a tail like this one, would bring the auction below this level. 47.35. We always keep in mind these two scenarios, okay? But right now, our priority for this main auction, this is a weekly auction, our priority here is buy. If you are new to my channel, let me explain what is a fix first of all. Fix happens when participants of the market close their positions partially or entirely. And that's it. Pretty simple, right? Then what is an inertial trade? An inertial trade is a trade taken in the same direction as the previous moment. All right. So now we have the task, we have two scenarios, and next we need to set a priority. The priority here is buy. And the certainty index here right now is 2 minus because this level is not repositioned yet. Okay. Daily auction. Moving on. Previously we had an impulse and here we have a consolidation, like you would call it a consolidation or a range, but it's a true balance. Why? We had a previous impulse, now we have a fix, we have an inertial trade, and this is the end of the first segment. Now we have the second segment fully formed, which is seller's responsive activity and buyer's responsive activity. We have two crucial factors met here. We had the previous impulse, which allows us to classify all these as a balance, and we have the second segment of the balance formed. What is the next step of the market structure I teach and preach? What is the next step? The next step is the third segment. What can happen here? In a positive scenario, let's start from the positive scenario. In a positive scenario, the price would reinforce the middle level, and reposition this level, this key resistance level. This is a positive scenario, which is pretty logical right now. Right now, what we are doing right now, by the way, we are gathering clues. We are gathering clues from each auction to see the big picture, to understand who rules the market right now, and then we will align everything together with the 15-minute auction to understand where and why to take trades. Okay, this was a positive scenario. Let's talk about a negative one. In a negative scenario, we can see another form of the third segment, which in this particular case will be responsive activity reinforcement. In this case, the auction would accumulate some volume here and then, or it can be an aggressive seller's reaction and would and would bring the price below this key support level. What is the task here? The current task here is to reposition this key resistance level. And the priority here is also buy. The certainty index is 2, because right now in the current activity we don't see a seller. Yes, the sell is with us because we have a responsive activity, and this is the only factor for sell in the whole auction. The only factor. All right, I told you about the priority. I told you the priority is buy. Yes, the certainty index is 2 minus, and here we have the only factor for sell, which is responsive activity. Now moving on to the hourly auction. In this particular contract, we don't see any selling activity. This is a capture volatility. And the task of any volatility is, of course, to reposition this volatility. Once again, repositioning is an impulse above the key resistance level. All right, the task here is repositioning, and what we see right now we can't classify as a true repositioning because we can classify this movement as a clear impulse. This is not an impulse. If we take just this little segment, I would call it just a directional volatility, and we can't classify this little movement as repositioning yet, but the task here is absolutely clear. What are the two scenarios here? The positive scenario is just moving up, maybe without repositioning, without clear repositioning, so the auction can build up some volume here and then move higher. The auction can bring the price higher without clear repositioning, without clear impulse. This is a positive scenario. What about the negative scenario? We see this selling activity in the previous contract. We need to take this into account. And what can happen here? Here we can see an activation, an activation of the seller. All right. And these are two scenarios, but taking into account the current situation, taking into account the buyer's activity, right now there is not a reason to sell. The priority here is buy. Certainty index is 2, all right? We have two scenarios, and that's it for this auction. Now let's move to the 15-minute auction. What we have here? Previously we had some volatility here, but right now usually I analyze 2, 3, max 4 weeks together to see the big picture, to see the whole picture. Now 15-minute auction. What we see here is a directional volatility with repositioning. The task here was to reposition this level 57.60. Here the task is fulfilled. Here we see an impulse. Here we see the repositioning volumes and repositioning. And then after the repositioning, the price just moves in a directional volatility, taking into account the complexity of the whole auction, which is repositioning this key resistance level. This is normal. This directional volatility is normal. There is nothing that could change our priority or make it variable. No, our priority right now is buy, and it's pretty logical and it's pretty clear. Now, here, what the task is here right now is just to continue the moment, continue the buying activity. Here, right now, and right here, I don't see any reason for a negative scenario. The only scenario for this week is this: buy, nothing else. Yes, this priority throughout the week can change. It can change if I see some influential counter-directional movement. In this case, I would change. I could add a negative scenario. You see, I analyze every auction like a living body. Every day it gives me some information. Every day it gives me clues. I gather all these clues together and take appropriate decisions. Now let me tell you about the big player. Now we analyzed every single auction. What I want you to understand, to have the logic like I have, you need to analyze every single auction, every single time frame like an auction. You don't need anything else except weekly auction, daily auction, 1 hour auction, and 15-minute auction. These are 4 main time frames you need to analyze. You analyze the whole auction, all the big 4 time frames once a week, Saturday or Sunday, and then every single trading day starting from Monday and ending with Friday, you analyze the 15-minute auction plus the previous day activity, closure, volume profile, positioning, the overnight volumes, the closure, the volatility map. You take appropriate decisions. All right, this is what you do every day. Once again, once a week, you analyze the whole auction, all the 4 main time frames, plus the closure of the previous week. And then every single trading day, you just analyze the 15-minute auction, aligning it together with the previous day, and always keeping in mind everything happening throughout the whole auction. You need to understand how this little activity affects the whole auction, right? Let's get to the institutional trader, where you need to look for institutional traders. Institutional trader is clearly seen here on the daily auction. Because this responsive activity may mean that the daily institutional trader can hold their positions up to a year, which means this auction could be bought throughout the year. Yes, through some retracements, pullbacks, which is normal. Because this is the law of the market. When the price goes lower, you buy. When the price goes high, you sell. And this creates opportunities for retail traders like you and I to enter the market, to take a trade at a more interesting level. And that's it. And institutional trader is here, and I assume this could be a daily buyer. But the balance is a struggle. Yes, it's called a balance. Nonetheless, this is a struggle between a seller and the buyer, a true balance when we have 2 responsive activities, seller's responsive activity and buyer's responsive activity. We need to understand who can win this battle. Right now, I don't see any factors for sell. And as I said, I follow institutional trader. And in this case, institutional trader is the daily buyer who can hold their position up to 1 year. You see the magic here. Yes, the market itself is fractal. When you have enough capital, when you capitalize all your trading experience, you can hold. When you have the logic like I have, you can hold your positions for several months, which is incredible for any trader. You analyze everything, and through some daily activity or 15-minute auction activity, you enter a trade and hold it for several months. Okay, now we know what is happening. As for now, we answer 2 main questions. What is happening? Throughout each auction, we understand what is happening on the weekly auction, on the daily auction, on the hourly auction, on the 15-minute auction. We answered who to follow. We follow the buyer. Our priority is buy, nothing else. Right now, nothing else. Yes, we have some factors for sell, but there are a lot of factors that weaken the selling responsive activity. Does it make sense? For me, it makes a lot of sense. Okay, right now we need to understand where to take our trades, right? And for this, once again, let's take a look at the 15-minute auction. In the current activity, we don't have any counter-directional movements that can complicate our buying. Yes, this is the end of the previous week, Thursday and Friday, 2 days. Let's analyze just 2 days. We have, this was Thursday, was a very easy and tradable day. I took a trade here, and then Friday, the end of the week. What happened? Once again, this is a 30-minute auction. It's just zoomed in, so I can see all the current activity. I use it with the 1-minute time frame, and I use here on the 30-minute time frame, I see the big picture. It allows me to see the zones of interest, and the 1-minute time frame allows me to take my trades precisely. And that's it. So let's analyze the second half of the previous week. What do we see here? This was Thursday and this was Friday. What happened on Friday? This is an interesting day, actually. This is the trap. Just don't get caught here. We see overnight volumes. Looks like a huge volume was accumulated here and then it was positioned as a selling volume. But once again, take a look at the 15-minute auction. This is that day. This is Friday. Has this day created any complications for this auction? Can we change our priority to sell just because of this moment? No, never. It's impossible. Our priority is buy, and we are looking for opportunities to buy, nothing else. Logical. By this time, I hope you understand. By this moment, by this point, I hope you understand why we can't look for any sales on Monday. Now we need to understand where to take a trade. So yes, what happened? What actually happened? Let me explain what happened on Friday. So usually, following the rhythm of the previous week, we had 2 trading days. It was Tuesday and Thursday. Yes, every day has a rhythm, a certain rhythm. Usually it's 2 trading days. It can be Monday and Wednesday, Tuesday and Thursday, Wednesday and Friday, or sometimes it can be like a broken rhythm. It can be Tuesday, Wednesday, or Thursday, Friday. All these helps us to understand what is going on. But we are always trying to find easy days we can participate in, we can take our trades just pretty easily, when everything is just clear. What usually happens on Friday when the rhythm is right, when everything throughout the auction is correct, is right. So as I said, the previous week had 2 trading days. It was Tuesday and it was Thursday. The rhythm is right. So actually, yes, we could take some trades on Friday, but for me, Friday was not tradable because I knew it would not create a point of no return. What is a point of no return? Just quickly, I'll record a separate video about the point of no return because this is the most brilliant idea of my W3Flow system, because it allows us to find days and exact timing of the day when we can take trades and just relax, not to worry about anything, because we take a trade and the price moves where it just should move, like it happened here. Here on 9:30, the auction moved the price where it should be moved, just like this. And on Friday, just swing traders. Who are swing traders? Swing traders are those who trade 15-minute auction. Swing traders just closed their positions, maybe partially, maybe entirely. Who cares? This is why we just need to understand what happens and what do this volume mean. I want you just to understand that this volume meant for this auction meant nothing. Once again, look here, 15-minute auction. What is here? What do you see here? Do we see any counter direction that can complicate our trading, that could potentially complicate our buys? No. This is why all we need to understand where the auction can bring the price next, so we can easily take a trade. Okay? Now, let me show you Thursday. This is Thursday. Take a look at this directional volatility before this impulse happened. And this is an interesting zone. This is a zone of interest for institutional traders. There are also intraday institutional traders. So you understand I have a gradation, but this is not for this video, of course. It's already too long. I want you to understand this is a zone of interest for intraday institutional traders. And if the auction would bring the price below this level, and we would see something, you would call it a liquidity sweep, a spike here, a peak here. In this case, we could easily buy as well. But let's see what happened. So now we understand this is the zone of interest. Here we need to look for potential buys. Now take a look at the timing. Right now, this is the beginning of the New York session. Now we understand we need to look for buy opportunities. Forget about this thing. Forget about, I'm sorry. I just removed the zone of interest. Forget about this imbalance bullshit. Forget about fair value gaps and everything. Please just forget about it. If you tried ICT trading strategy and it didn't work, just forget about it. We are speaking about real things that do work, that can capitalize your account. This is what we do here. This is why I am here. To help you understand the market better, to help make your trading more profitable. Okay, now 1 minute time frame. Everything is clear for us now. All right, we analyzed everything. Our priority is buy. Nothing catastrophic happened on Friday. We understand that swing traders just closed their positions, and these volumes mean nothing because they did not create any influence on the 15-minute time frame, on the 15-minute auction. I hope this is clear. We identified the key level where intraday institutional traders may be interested in taking trades. Now we analyze the pre-market activity. What do I mean by the pre-market activity? Is the activity before the New York session opening. Okay, what we see here, nothing. The auction just brought the price up to this level. Now we need to watch the first 5 minutes of the New York opening. We already understand the price is there. We need to look for opportunities to buy. My timing for this day was I was a bit hesitant to take early trades, but when I saw, before I saw the pre-market, but when I saw the pre-market, analyzed everything and understood that the price is already there. The question was, do we need to wait for anything else? Do we need any liquidity sweeps, anything here? Liquidity sweep is actually an intraday institutional traders activity. This is what a liquidity sweep truly is. Do we need anything here? As I said, this day, the previous day, which is Friday, has not created any influence on the 15-minute auction. This is why we don't even need to wait for any intraday institutional traders activity. All we need to do is to watch each time frame, in this case, each minute, pretty closely and attentively. And this is what we are going to do right now. Now, take a look at this volume. Is this the right time to take a buy? No, we need to wait. Remember the law of an effort and result. We need to see where this volume is positioned. We see this volume accumulation at the beginning of the New York session, which is good. But the price right now just reached the current little resistance. It's not that important, this current resistance. This is the high of the volume profile. This is value area high. It doesn't mean anything, but retail traders would try to sell here, following the exact logic I gave you at the beginning of the video. Okay, let's see. Yes, now we see that this volume was positioned as a buying volume, which is good. Now, after this bar, after I see this bar, I take a decision to take a buy. And I put my stop just below these volumes. Just below these volumes. And our target for this day would be at this, exactly here, at this area, because this area potentially could become an area of interest for retail traders. Retail traders, we can just, here we can see a negative reaction, a counter direction. We just don't need it. Why? We clearly understand that this movement can take up till this level and we don't need anything else. This can be a good trade. We understand everything and we take this opportunity, all right? This is our target. Now see what happens. Once again, this is a 30-minute auction and this is 1 minute auction. Just watch. This is it. As you can see, it was a beautiful trade, pretty logical, pretty clear, pretty understandable, at least for me. If you want to understand more deeply the logic behind everything I told you today, if you are interested in the volume analysis, just go to my educational playlist. and watch every possible video I publish there as many times as needed. But in this type of videos, I always try to just decode everything. I gather clues. In front of you, I gather clues, I analyze the auction, and I always answer three main questions. Three main questions. What? I'm talking about the context, the auction principles. Who to follow. And here I'm talking about institutional traders. We know who to follow right now. We are following the buyer. And we need to understand where exactly to take a trade. This is why we analyze the 15-minute auction pretty closely and the previous day and the impact of the previous day, volatility map, closure, volume position and everything. The impact on the 15-minute auction and potentially on the higher time frames. And this is how we are able to enter trades like this. And that's it. Take care of yourself and your family and stay profitable. See you in the next video.